Dear Chartered Accountants, working professionals and students in the domains of Indian auditing, accounting and the tax and regulatory space, welcome to podcast of Fca Deepak Rao, a practicing Chartered Accountant. Daily news and updates for 15th July 2023. Finance Minister Nirmala Sitharaman clarified on Friday that annual income up to Rs 7.27 lakh will not be taxed. This is because the basic exemption limit for the new income tax slabs is Rs 3 lakh and taxpayers who opt for the new tax regime will also be eligible for a standard deduction of Rs 50,000. This means that the effective exemption limit for taxpayers who opt for the new tax regime is Rs 7.27 lakh. Income Tax Department has issued the common offline utility for Form 3CA, 3CD and 3CB, 3CD for the assessment year 23-24. This utility can be used by taxpayers and their chartered accountants to file these forms offline. The Revenue Secretary Sanjay Malhotra, when asked if there was any plan to extend the deadline for filing income tax returns in view of the floods and heavy rains in North India, said there is no proposal under consideration to extend the deadline. His advice to all the taxpayers is that they should file their tax returns. There will not be any extension in the deadline like last year, and the earlier people file their tax returns, the better. Adani Group had put in a 5,069 crore bid for the redevelopment of one of the largest slums in the world, outbidding DLF, which had quoted 2,025 crore. The Maharashtra government has approved Adani Group's bid for the redevelopment of Dharavi slums in Mumbai. The Eknath Shinde-led government has issued the government resolution in this regard on Thursday. E-commerce giant Flipkart, owned by Walmart, is set to distribute ESOPs worth $700 million to 19,000 employees, marking a significant instance of wealth creation at the company. Flipkart plans to repurchase employee stock options as part of its strategy to establish full ownership of payments and financial services unicorn PhonePe. The move aims to attract and retain talent amidst a challenging funding climate that has led many startups to implement layoffs. SEBI, via its circular dated 12th July 2023, has introduced BRSR core regulatory framework for ESG disclosures on value chain and assurance for listed entities. From financial year 23-24, the top 1,000 listed entities by market capitalization must make disclosures for the value chain and assurance as per updated BRSR format as part of the annual reports. The requirement of BRSR core is applicable in phases depending upon financial year, which is as follows. For the financial year 23-24, the BRSR core requirements shall be applicable to the top 150 listed entities in terms of market capitalization. In the subsequent financial year 24-25, the BRSR core requirements shall extend to the top 250 listed entities. Continuing the trend, in the financial year 25-26, the BRSR core applicability shall encompass the top 500 listed entities. Finally, by the financial year 26-27, the BRSR core requirements shall be applicable to the top 1,000 listed entities, ensuring a more comprehensive coverage of significant companies operating in the market. In this regard, the value chain must encompass the top upstream and downstream partners of a listed entity, cumulatively comprising 75% of its purchases or sales by value respectively. The board of the listed entity is required to ensure that the assurance provider of the BRSR core has the necessary expertise for undertaking reasonable assurance. Also, listed entity must ensure that there is no conflict of interest with the assurance provider appointed for assuring the BRSR core. This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.